Welcome you again to our solo 401k and self-directed IRA Q&A session. I'm Natalie with Sense Financial, and we are a boutique financial firm specializing in self-directed retirement accounts with checkbook control. Today I am here with Dmitry, and as always he will be answering all of the questions. Dmitry is the founder and president of Sense Financial. He began his career in financial planning and real estate investing in 2000. He owns multiple investment properties in various states and is a licensed California real estate broker. Dmitry holds a designation of Certified IRA Services Professional from the American Bankers Association, and over the years he has taught hundreds of investment and financial planning seminars and has mentored thousands of investors. Thank you for joining us, Dmitry, and answering questions today.
Natalie, it's great to be here with you, and I'm looking forward to another session.
All right, let's jump in. First question we have here is from Julie. And she's asking, are there any advantages of buying a home in Spain with 401k plan funds?
Well, Julie, with the self-directed solo 401k plan, you can buy any investment, virtually unlimited investment options, and that includes real estate outside of the U.S. You can certainly buy investment property here in the U.S. as well as outside of the U.S. We do have clients who own real estate in South America, in Canada, Japan, Europe, India. I can't really comment on buying anything in Spain. I don't know much about this country as far as the investment property is concerned. So this is an investment decision that you're going to have to make. But you certainly can buy a property in Spain and pretty much anywhere in the world. One thing that you need to be aware of is that when you buy an investment property using a self-directed retirement account, IRA or 401k, it is for investment purposes only. You cannot use it personally. You cannot benefit from it. Your immediate family members cannot benefit from the use of the property. You cannot do any work on the property or provide any services, such as if it was a vacation rental, as an example, short-term rental, you will have to outsource the management of the property. But you control it, you make all the decisions, and ultimately it's up to you whether you decide to buy the property or whether that's going to be investment property or some other asset. But you have the freedom to do so.
Okay, next question is from Crystal, and she'd like more information on 401 traditional to Roth conversion strategies.
Crystal, with self-directed solo 401k plan, every plan that we establish here at Sense Financial does come with the Roth provision. And Roth provision allows you to make contributions to the Roth, so those are after-tax contributions, or make conversion. So if you have pre-tax funds in your retirement account, you can convert them to Roth. It is a taxable event. It is a reportable event. So you will be taxed on the tax return for the year in which you're making the conversion. Conversion cannot be done retroactively. So whenever you convert, that day is fixed in. And so that's going to be, if you convert today, that's going to be for 2025. If you convert on January 1st of 26, that's going to be reportable on 2026 taxes. But we do have guidance on how to do that on the client portal. So log into the client portal and just go to the knowledge base and type keyword Roth conversion, and you will get a couple of articles there with the guidance on how to perform that, how to report it. It needs to be reported on a 1099-R and then imported in your tax return so that you can pay taxes. But follow the guidance on the client portal. Good question.
Question from Philip. How can I buy crypto in my IRA LLC?
Philip, again, with the self-directed IRA with checkbook control. In your case, it is an IRA LLC, also known as IRA-owned LLC. So you have an IRA which owns the LLC. You're the manager of the LLC. As an LLC manager, you control the LLC, and therefore you can control all the investments. You have to follow the IRS guidelines for making the investments, but you can invest in virtually anything, including cryptocurrency, and a number of our clients done so. You do need to open an account at crypto exchange in the name of the LLC using LLC tax ID number, and then you can link that with the checking account that is in the name of the LLC. So you can link the crypto exchange account with the account for your checking account for the LLC, and then you can use that to purchase crypto. So that's an overall, and then again the details you will confirm with the crypto exchange.
Question from Brian: can you explain what UBIT is?
UBIT stands for Unrelated Business Income Tax, and this is a tax that is assessed on tax-exempt entities, non-profit. So it's not just for IRAs and 401ks, it's other tax-exempt entities such as, again, non-profits, church organizations, and so forth. It stands for Unrelated Business Income Tax, and it is a tax that is assessed on the activity that is not related to the nature of the business of the tax-exempt entity. So let me give you an example. Retirement accounts such as IRA and 401k, excuse me. So retirement accounts are designed to be invested passively. If you invest retirement funds in an active business, then the income or profits that you generate from the active business will be subject to unrelated business income tax. So even though the retirement accounts are sheltered from the income tax on the passive investments, active investments will result in taxation. In addition to that, if you're using a self-directed IRA and you buy real estate using leverage, so you use a non-recourse loan to acquire investment property inside of your self-directed IRA, the income portion that is derived from the leveraged portion of the property will also be subject to UBIT. Solo 401k is exempt from that, but IRA is not. So that's a major advantage 401k has over an IRA. Now, keep in mind that you can still deduct a portion of the investment expenses, the mortgage, interest, property taxes, repairs, property management, and even depreciation can be deducted when calculating UBIT on leveraged real estate inside of an IRA.
Okay, a question from Amy. How can I finance an investment property in my SEP IRA?
If you have a SEP IRA, a conventional SEP IRA, you probably will not be able to buy an investment property inside of that conventional retirement account. It needs to be converted into what's called a self-directed, okay? And that's our specialty. Obviously, we specialize in creating retirement accounts with checkbook control. We just recently celebrated a big milestone. We assisted over 4,000 clients establish probably over 5,000 self-directed retirement accounts over the last 15 years we've been doing so. But you can convert your SEP IRA into self-directed IRA. Once you do that, then you can easily transfer the funds from your existing account to the newly established account, and then you can use that to buy an investment property. The way checkbook IRA works is that we create a special purpose LLC or a trust that your IRA owns, and then this investment vehicle will be used to purchase the assets. So in this case, LLC will be the owner of the property. You will be the manager of the LLC, and so that you will control it. But feel free to reach out to our office, and we can guide you on the steps and help you make that happen.
Okay, our next question here is from Catherine. She's asking, how can I maximize the solo 401k benefits?
Well, Katrin, if you are a client, then you should be aware of the benefits of the solo 401k. If you're not, then certainly head to our website and learn. We do have several helpful pages as well as educational video that explains the benefits. One of the main benefits of the solo 401k is that its ability to make large contributions to the solo 401k. So as a single individual, you can contribute nearly $70,000 a year. If you are married and your spouse is also involved in the business, then you can potentially double that. So this is a great tax shelter for those who are in business and making good income. So be sure to maximize that. And then in addition to that, you have the freedom to invest into virtually anything. You're not confined to the stock market as with conventional retirement accounts that you open at Vanguard or Fidelity. You're locked in. You have boundaries how you can invest. You can only pick from the investment options which is confined to the stock market that are offered by the custodian of your retirement account. But with the self-directed solo 401k, investment options are virtually unlimited. And I'm sure you'll agree with me that you and I, we have no control over the stock market performance. That's why we've seen significant losses even earlier this year. Thankfully, the market recovered for the most part, for most people, but it certainly can be a major downside. Now, when you invest in something that you understand better and you can control better, such as real estate, you can minimize the risk, you can maximize the return, and you can certainly have more control over that. So those are the main benefits. There are more, again, refer to our video.
Okay, a question here from John. What brokerage houses can you recommend that have a simple format for a solo 401k to set up investment accounts for stocks?
Good question, John. For a self-directed solo 401k plan, you can certainly open a brokerage account in the name of your solo 401k trust. And you can do that probably at most of brokerages that are out there. If you head over to our client portal and go to the setup section and then click on banking, there is actually, we offer about a dozen options. You do need a specific brokerage account for the solo 401k, so it needs to be done properly, it needs to be set up correctly. But go to the client portal and then look at the options that are there. I'm sure you can find one that fits you, and then follow the instructions. Again, it's a personal preference. I can't tell you, go use this particular brokerage or that one. I personally like Vanguard, Fidelity. I have experience with that. I have a little bit experience with Schwab. Not a fan of that, but again, it's a personal preference. You might have to experiment and pick the one that suits you the most.
Okay, next question here is from Nandini. What are the real estate versus crypto implications?
Nandini, thank you for the question. I'm struggling to answer that because I don't have the content. So maybe if you're listening, maybe if you can expand on that. I'm assuming you're asking buying real estate versus crypto inside of a self-directed retirement account. You certainly can do that. Again, if you buy both of these investments, the income will be sheltered from taxes from both. The gains will be sheltered from taxes. If you're using an IRA, though, to buy real estate and there is a leverage, there might be some UBIT implications, so you need to be aware of that. But I don't think it's a straightforward comparison. I personally prefer real estate, crypto. This is my personal opinion. That might be controversial. Crypto is more of a speculation investment. There is no intrinsic value in that. Real estate, you have asset that is underlying asset that secures the your investment. So I prefer that, but I'm not sure exactly what you want to discuss. You're welcome to contact the office and schedule a consultation. Maybe we can brainstorm on that a little bit, but we don't offer investment advice here. The bottom line is that you can do both inside of your retirement account. Which one is best for you? That's going to be your personal preference.
Okay, a question here from David. Can you take money from an active HSA and invest it in a self-directed account?
If you're referring to investing in a self-directed IRA, no, you cannot move HSA to a self-directed IRA because HSA is not a retirement account. It's a health savings account. However, HSA can be self-directed and can be invested in alternative assets. We currently do not offer that, but we are working with a custodian that will enable to do so, and that's not rolled out yet, but we're expecting that to happen in the next couple of months. Hopefully, so check back with us, and we might be able to help you a little bit later this year.
Okay, next question is from Thomas. Can my wife and I combine our IRAs to buy an investment property?
You can combine two spouses' IRA to buy investment property. That is possible. It can be tricky though, because you need to maintain the percentages. You need to split all of the income and all of the expenses. So again, theoretically it is possible. It can be tricky. Is it good practice? Again, in some cases it might make sense. In other cases, maybe not. So depending on the situation, I and I'm a believer in the KISS principle. Keep it simple, Sam. So I like to simplify things. Our lives are complicated as it is, and I prefer not to complicate my life more than it should be. So if you have enough funds in your IRA to buy a property, just with your IRA, do that. And then use your wife's IRA to buy something else, to make another investment. So that's keeping things simple. But again, I don't know the specifics of your situation, and perhaps we can discuss that if you want to call the office and schedule a consultation. We can expand on that a little bit more.
Okay, a question from Kathy. How many bank accounts may I have for my IRA LLC?
There is no limit how many banks accounts you can have for your IRA LLC. You can have 2 accounts, you can have 3 accounts if needed. Typically, just one checking account is enough. Now, if you're talking about having a checking and savings account, you can certainly do that. If you're talking about having a checking account and a brokerage account, so that you can invest in stocks, you can do that, but you're asking about bank accounts. So again, typically, you just need one account. Again, keep things simple. There is no need to complicate your situation more than it should be, but there is no limit. You can have multiple bank accounts if needed.
Okay, another question from Kathy. Are there minimum required distributions in IRA LLC?
If it is a Roth IRA LLC, there is no RMD. There is no minimum required distributions. If it is a traditional IRA LLC, then yes, there is a RMD, and I believe now the age is 73. So if you're reaching that age, then you will be required to take the RMD. One thing to comment, and to all of you, please hear me out, all of you who hear me, it's very important because all of us will get there sometime, right? So it's important to plan for that, because what you don't want to happen is that if you reach the RMD and you own maybe an asset that is illiquid and doesn't produce enough income to satisfy the RMD, then you're going to be forced, you're going to have a dilemma to deal with. You probably will be forced to liquidate that asset or maybe distribute portion of that to yourself. And again, those things are complicating your situation. So plan for that ahead of time. Start thinking about this 10 years before the RMD. So you can run the numbers approximately. You can see how much you will have to take and start thinking about that. Ideally, you want to be in the situation where you have number of assets that producing passive income for you, and you can just use that income to satisfy the RMD. Example can be a rental property producing rental income, or you can have some private loans, promissory notes, trust deeds that are owned by your IRA LLC, and the interest income flows back into the IRA, and then that can be taken out as a RMD, as a distribution.
Okay, a question here from Lok. What are the differences in the self-directed 401ks?
Again, look, if you're there, I would appreciate if you can expand on that, because I'm not sure I'm understanding the question. Differences in a 401k comparing to what? So I'm not sure how to answer that because I don't fully understand this. Again, look, I just expand on your question if you're here.
Okay, this question is from Skip. I'm interested in buying a specific note and trust deed. I need to know how to do this transaction.
Another good question. So Skip, if you have a self-directed IRA, LLC, or a trust, or a solo 401k, which again is using trust as the funding vehicle, LLC or a trust will be the investor. You as the trustee or as the manager of the LLC control all the investments. So you identify the investment, you complete the paperwork. All the paperwork needs to be in the name of the LLC or a trust. You will be signing everything, and then when the time comes to funding, you will wire the funds or write the check or somehow transfer the funds for the investment from the LLC or a trust checking account. Pretty straightforward. Again, the key is that the title to the investment must be in the name of the LLC or a trust. You must use the tax ID that is for the LLC or a trust, but you control everything.
Okay, next question is from Daniel. Is there any update on being able to roll Roth IRA to Roth Solo 401k?
There has been talk, and there's been proposed legislation to allow Roth IRA to be rolled over to Solo 401k, but that has not happened, so there is no update on that yet.
Okay, this question is from Laura. I have been making contributions to my Solo 401k and Roth accounts, but I have had difficulty finding a way to get it to grow. The bank I deposit to doesn't offer any interest earning accounts or options. Real estate hasn't worked out well for my funds either. Any suggestions?
Thanks for asking the question, Laura. Well, if you have a self-directed solo 401k plan and you just depositing or making your contributions to the checking account, obviously it's not going to grow there. Whether there is interest or not, I mean, you possibly can get 2-3% interest bearing accounts or savings accounts, but that's not enough. That's not even enough to fight the inflation. So you do need to invest the funds. Again, with the self-directed solo 401k, you have unlimited investment options. You don't want your money to be just sitting there doing nothing for you. There are, again, unlimited options for you to invest. We do not offer investment advice here. Now, I'm an investor myself. I practice what I preach. I can give you some guidance. You can call me directly. We can talk. I can learn a little bit more about what your goals are, what your risk tolerance is. Maybe I can share with you some of the things that I'm doing, which primarily I'm doing private lending out of my retirement account. I think it's a great way to invest. It's low risk, it's completely passive, and I enjoy double-digit returns. But you do need to, again, it's a self-directed account, so you need to direct it. But you don't have to do it alone. There are resources out there. I'm happy to help you to a certain degree. Let's talk. But you need to take charge of this. You need to take the ownership, and you need to learn about investing more. And yes, if certain things didn't work out for you, I have some negative investment experience as well in the past, but I learn and I move on and make better choices. So should you as well.
Okay, a question from Jerry. How can I roll over my IRAs to a self-directed 401k, which we have already established?
That is super easy, Jerry. If you have a self-directed solo 401k plan, and you also have some IRAs out there, you certainly can do a direct rollover from an IRA to a 401k. So you will complete the rollover form, which is available to you on the client portal. You log into the client portal, you go to the maintenance section, and or actually for the rollover, you go to the setup section and then click on rollover step, and then we spell everything out for you. The rollover form is there, the instructions are there. It's really step by step. You just need to take a little bit of time to educate yourself and follow those guidance. Sometimes the sending custodian might have their own forms for you to complete, so you need to check with them. But usually, if you're moving funds from an IRA to solo 401k, all you need is to complete our form. And again, that is available for you on the client portal. It's very important that you follow the instructions precisely. If you deviate, you might run into trouble. We've been doing this for 15 years. We fine-tune the process. Just follow the instructions, and in a few days, you should have the funds in your 401k available to invest.
Okay, a question from Guy. I'm in the process of selling the condo I hold in my self-directed IRA. I'm looking at other properties that I'd like to buy with non-IRA dollars. Can I buy one of these properties with non-IRA dollars, then swap it into the IRA after I sell the IRA asset, thus taking a sale proceeds to replace the dollars I used from outside the IRA to buy the new property?
Guy, I like your creativity, okay, but unfortunately that's not going to work. What you're describing here is a prohibited transaction. If you personally buy the property and then you wish to get that inside of your retirement account, that's not possible, because your IRA or 401k will have to purchase that property from you. You're a disqualified person. No transaction is allowed between disqualified person and a retirement account, so that will violate IRS rules, and that will screw up your IRA. You may lose your entire IRA to penalties, because penalties for a prohibited transaction can be up to 100% of the account balance. So don't do that. Just sell the property and then use the proceeds to buy a replacement property. The beauty of a self-directed IRA or a 401k is that you can take the time to find the replacement, and there is no time constraints, unlike personally. If you sell in a property that you personally own and you want to defer the taxes, you have to use tax deferred exchange, 1031 tax deferred exchange. And there are time constraints. You have to identify the replacement property within 45 days, and I think you have to close it within 90 or 60 days. I'm forgetting. I think or 90 or maybe 180 days. But with solo 401k, there is no time constraints. You can sell the property and just take as long as you need to find the replacement one. But do not get personally involved in that, because you're going to mess up your IRA.
Okay, question from Linda. Do you have to fill out any forms to take distributions from your solo 401k?
Yes, you do need to fill out a distribution form to take distribution from the 401k. So there is a form that is available for you on the client portal. So this is a form for you to document the transaction. And this is also reportable and a taxable event, unless it's a distribution from the Roth sub account that you're taking. So you have to report it no matter what, whether it's taxable or not, using a form 1099-R, which goes to the IRS, and then you get a copy of that, you give that to your CPA, and then your CPA will input that into the tax reporting software. Again, we do have guidance on that in the client portal. Just go to the knowledge base and type distributions, and you'll see the instructions there.
Okay, question here from John. Does Sense Financial offer accounting services for self-directed 401ks, or can they refer me to one?
We do not offer accounting services for the self-directed 401k. Maybe you meant to ask bookkeeping services, because there's really no accounting you need to do. You just need to keep the records and keep the records of transactions. Most people find it pretty simple. You can use the system or a software that you're already using for your personal or business finances. There are a number of them. You can download and install software on your computer, or you can do it online, or you can simply use a spreadsheet. But we do not offer this service, and won't be able to help you with this. Check with your CPA. Maybe they can provide some assistance with this, but otherwise you can outsource this to a bookkeeper.
Okay, and then a question here from David. I'm using my solo 401k to purchase property. Please explain the full steps, if possible, for the non-recourse loan, escrow, and title, etc. Also, the name for the name is our personal name or the name of the solo 401k.
David, similar question to the one that been asked earlier about buying trust deeds. But the concept is the same, and the process will be the same whether you're using a self-directed solo 401k, which is using trust as a funding mechanism, or you're using a checkbook IRA, which uses LLC, or a trust as a funding mechanism. Remember, you are the manager of the LLC, or you are the trustee of the solo 401k trust. So you make all the investment decisions. So step number one is to identify the property. Step number two, you're going to make an offer on that property. You're going to put the name of your 401k trust as the buyer. You will sign that as the trustee of the 401k trust. And then you open escrow. Your real estate agent will guide you with that. The earnest money deposit must come from the 401k. You cannot use personal funds for that. The title must be taken in the name of the 401k trust, not in your personal name. Now, here's a little bit of a caveat. In some of the states, and you have to check again with the title or escrow company on local regulations, but some states do not allow trust to hold the title to the property. So then, in this case, you as the trustee will take the title. But again, the key here is you're not taking this under your personal name. You're taking this as the trustee. Here is an example. John Doe as a trustee of ABC 401k trust. So not just as John Doe as an individual, because that will be a violation. And then when you're ready to close the escrow, you will wire the funds from from your bank account to escrow for this transaction. And then you will, if you financing the property, you will have to arrange the non-recourse loan, obviously, and then they'll work with escrow to complete this transaction. But those are the steps.
All right, those were all of the pre-submitted questions, so we'll move over to the questions in our live chat. For those of you on here, if there are additional questions, just want to encourage you to use this time to type up those additional questions. But question here from Gabe. Is it accurate that an IRA is subject to UBIT but not a solo 401k? If so, I have a loan on a property in my IRA that transferred to my solo 401k. So does it no longer apply?
Gabe, first let me clarify that UBIT stands for Unrelated Business Income Tax, and this is a tax that is assessed to tax-exempt entities. And the general statement that 401k is not subject to UBIT is not accurate. Solo 401k may be subject to UBIT on business income, but solo 401k is exempt from UBIT on income from leveraged real estate, unlike an IRA. So that will be, I want to make sure you understand this. And that is the nature of your question. You do have, it appears that you had a property with a loan inside of an IRA, and you moved that, you rolled that over into solo 401k. So now your solo 401k has the loan or property with the loan, and you're correct. The solo 401k will not be subject to UBIT on leveraged non-income derived from the leveraged portion of the property. So there'll be no UBIT implications for you. If I'm understanding this correctly, that the property now is inside of your solo 401k plan.
Okay, a question from Sandeep. My spouse has a fund that makes private lending investments using third-party investor money. She is in the process of closing the fund and returning the money to investors. Can she purchase one of the fund's investments using our solo 401k at a current market value and return the money to investors?
Oh, okay. I need to read this again. My spouse has a fund that makes private. Can she purchase one of the fund's investment using our solo 401k? Well, if your spouse is the general manager of the fund, then your retirement account cannot make investment in that fund. That will be a prohibited transaction. So that's not going to work. You can invest in somebody else's fund, but not in your own fund because you're a disqualified person. Again, I'm assuming I'm understanding your question correctly. If you want to expand on that, feel free to schedule a call with me and we can brainstorm, but it looks like it's not going to work because you are the general manager of the fund.
Okay, another question from Sandeep. Are there any benefits to using a trust versus using an LLC?
I'm assuming you're asking about using a trust versus LLC inside of an IRA. So to set up a checkbook IRA and obtain the checkbook control, we sometimes using the trust vehicle, sometimes LLC. So here is the pros and cons of one versus another. LLC needs to be set up and registered with the state. So there is additional cost for this. So there are state fees initially when it is set up and when it is maintained. Some states do charge annual fees, such as here in California, it's $800 a year. Now, trust is not registered in the state, so there is no state registration fees initially or annually. And also it's private, so LLC is a public record, trust is not. But LLC does offer additional liability protection, just as the name implies. LLC stands for Limited Liability Company. So depending on what you're investing, LLC might be beneficial. So if you're buying a rental property inside of a IRA LLC, that provide you additional liability protection.
Okay, a question from Phil. I appreciate the answer regarding crypto. Do you know of any exchanges where they allow this process? I've tried a number of exchanges and they have all rejected me during the KYC process. Any help would be greatly appreciated.
Sure, Phil. I do not remember by name the exchanges. This is not, I don't deal with that often. But we do have a couple names, and we do have an article in the knowledge base, so you can refer there and click on those links and get taken to the exchanges that can help you.
Okay, question from Turney. What happens to my self-directed IRA LLC when I pass away?
Good question. And that's something that all of you, again, all of us need to plan, regardless of your age. Accidents do happen, and over the last 15 years, I had to deal with that. And let me tell you, some of the cases when I was assisting clients were not that good, where what I mean by that is that the owner did not properly plan that and didn't inform the beneficiaries. So you need to have a trusted person who have basic understanding what it is that you have, and that you have a self-directed IRA LLC, what are the assets. You need to have a list of assets in there, and so that if something happens to you, then they know what's going on. But to answer your question is that when you open an IRA, you are asked to designate a beneficiary. And typically you'd want to put spouse as a primary beneficiary, and then you can also designate contingent beneficiaries that can be your children or somebody else. Or if you have a family living trust, you will put family living trust as a contingent beneficiary. But the short answer is that it is determined by who you designated as the beneficiary when you open your IRA. And if you haven't done that, you want to make sure that you do it, because you don't want the state to get your assets.
Okay, last question here from Mohammed. Form 5500 preparation and deadline. When is a good time to talk about it for filing?
Mohammed, we have detailed instructions on how to complete this form on the client portal. So you need to go to the client portal, you need to go to the maintenance section, and then click on the annual filing requirements form 5500 easy. We tell you step by step, line by line, how to complete this form. So that's what you want to do. There's really not much to talk about this. The deadline is for most clients is end of this month, end of July, but it is actually end of the 7th month following the end of the plan year. So if your plan year ends on 12/31, that's going to be July 31st. But that's not always the case. Sometimes plan year can be the same as a fiscal year for the company. And so if that falls on, let's say, October 15th or March 15th, I'm sorry, October 30th or March 30th, then that will adjust the deadline for the Form 5500 EZ. But look, if you don't want to be wrong about this, just file that early. Don't wait until the deadline. This form is typically released by February. So typically in February or March, you can complete that. You should have everything you need to complete that form. Do that early and do that in the Q1. So this way, then you won't ever miss the deadline, regardless of your plan year end. Again, if you refer to the instructions, we tell you there line by line how to complete that. If you're doing this for the very first time, it might take you a little bit longer to complete, because you have to gather the information. But once you do it one time, then second year it's going to be pretty much the same information. You're just going to copy it from one form to another, from the previous year to the current year. The only things that will change is the plan assets, because obviously they will change from year to year, and then any contributions that you made to the plan for the year. So those are the only changes that will be that will vary from year to year. The rest should be the same. But do that, and it is required to be filed if your plan assets exceed $250,000. If you're less than that threshold, you're not required to file. However, we do recommend that you file anyways because it's just a good practice. You get records with the IRS, you get statute of limitation going, and it's going to be easy for you to do it because you're going to be in a habit of submitting this form when it is actually required.
All right, looks like that was our last question, so we will go ahead and wrap up our session. Thank you for those of you who joined us today, and we do look forward to joining any future sessions that we have. Our next live Q&A session is on Monday, August 4th, so we are hoping that you can also make that event. If any of you have questions after the session, please don't hesitate to reach out to us. We can always schedule a call with one of our experts and to discuss your situation. But thank you again, everyone.
Thank you, Natalie. Thank you, everybody, for joining. Great questions. I enjoyed answering them. I look forward to seeing you next time, and you do have a great rest of the day.